When we asked people what their priorities were, and then you separately asked them, tell me what you did over the last year, you saw this huge disconnect. Admin, there's absolutely no constraint, and nothing bad happens if you take that off site. As long as you put it into the domain of a capable specialist. In admin, you save money just by charging for stuff that you keep forgetting to charge for normally. We went through 4 different categories of technology, so 20 people, that's 80 different instances that we asked them to tell us about ROI. And in not a single one was there any measurement of how much ROI they were going to generate.
Okay, welcome to the Digible Dudes Podcast. I'm David.
I'm Reid.
Reid, we had Dom. I don't know why I said his name weirdly like that, but we had Dom on from 20for20’s. He was really helpful. We had not met him previously, so this was our first interaction with him. And I was just telling you offline how energizing it is for me to meet new people in the industry that have such breadth. And then it's like, hey, look, even though we've been here for a while, there's still so many great new people for us to continue to meet and get engaged with. So,
yeah, he was terrific. Wealth of knowledge, and I'm dying now to see these white papers, which I think was part of the point. But really cool that he's been doing it at 6 years. Is that right? And then modifies them a little bit based on kind of what's trending in the industry, so to speak. But also tries to keep it consistent enough that you can, see some of the year over year, I guess, changes that's happening with the industry. But with his background in revenue management, obviously we poked a little bit there, but had a lot more questions. And one of which I didn't get to that I hope if we get a round 2 with Dom would be the same one that I posed to, I guess, the guy from apartments.com. But in this environment, how much overwriting are you expecting to happen? Mm-hmm. And he mentioned that, was it for Rebo or
Reba?
Reba, yeah. That they've made, because you asked if revenue management needed an overhaul, and, he indicated that Reba has solved for a lot of the issues that the legacy tech was not. But that would be one I'd still be curious to ask. Mm-hmm. Is, we were kind of, everybody looked like a genius the last 10 years. Mm-hmm. And now that there's some headwinds, what does he expect as it relates to, the amount of, I guess, human involvement?
Mm-hmm. Well, it's interesting because he had mentioned that he'd worked in a half dozen different industries for revenue management before. And so apartments is just one of those. And I started off the interview. I wonder if he thought I was like trying to trap him or something. I was just like, oh, who does it the best? He's like, airlines, basically. And then I'm like, so you rate them a 9 or a 10? He's like, yeah. And I'm like, so where's apartments coming?
I love that backup. Did he give you a number? I don't know that he did.
Think he did.
Yeah, I think you let him off the hook, which is not normally your
Yeah, well, I didn't want him to think I was trying to trap him. It was more of just, to your point, I was thinking like airlines have to do it on the fly. Like if you check too many times in a day, the price will change on you, right? Let alone, but as you're saying with apartments, you may have your weekly revenue management meeting and then a human engages. Can you imagine someone trying to intercept a flight price and be like, oh, let me add 50 cents to that? So
it actually explain a few things, to be honest.
Yeah. So that's why I was thinking like we might get a low score, which would be fine. It just shows opportunity, right? About like how and I get energized by continuing to see the opportunity in this space. But anyways, we had Dom on because he has for the last 6 years conducted a survey where he brings on 10 CIOs and 10 COOs to answer a survey that basically goes through like, what did you do last year and what are you excited to do this next year? And so we've got a link in the show notes where you can download that white paper and get a handle on things. But then we just sort of go wherever the conversation takes us, which I thought was really interesting. In particular, I wanted to bring something up to you, Reid. He had mentioned how I asked him towards the end of the interview how like what the biggest opportunity in multifamily is today for technology if you were starting a company today. And he had mentioned that AI and being first mover would be one of the areas he would be looking. So some version of NLG. And we just ran out of time, so I didn't get to go there. But we don't usually cover recent events on this because we like the episodes to remain evergreen. But it just is very timely because are you familiar with Klarna?
No.
So Klarna is one of those like buy now, pay later kind of companies, kind of like.
Oh yeah.
Okay, great.
I'm don't know that one by name, but I know the model.
Yeah, it's a big one though. They just announced a 700-person layoff, and the reason they gave for their layoff was our AI, our NLG model, is answering support tickets and is doing the work of 700 people, and so we don't need them anymore. That was their announcement. And then they gave, what I found fascinating is they gave numbers to back it up. So they said previously with human support reps, the average person, the average ticket basically took 11 to 13 minutes to resolve. With our new NLG, it takes 2 minutes on average to resolve a ticket, with a higher satisfaction rate from the user than the human rep. And they said the number of repeat people asking questions has dramatically decreased. So they're getting their answer in 2 minutes versus over 10, and they're not having to ask the question again because they're getting the answer they need and moving on. And so they said, great, we don't need these 700 people. And they said it'll add about $20 million in EBITDA for them. But that 20 million, the prediction is it's not going to go straight to the bottom line. They'll actually now, I mean, people often are fearful of technology removing jobs, but when you save money, you don't typically just keep all of it. You often are like, great, now let's use half of that for R&D and maybe we'll keep half. So anyways, I just thought it was interesting because that's kind of where Dom was going with the conversation, saying, hey, you should explore this because it does seem like with centralization, you can start to minimize headcount.
Yeah. How many account managers do we have?
Not 600 or 700.
Yeah. Are you going to be sharing that at the next roundup, that story?
Yeah, maybe.
Well, it's too bad Tony Hsieh isn't with us anymore, but I will be curious to see how Zappos, I guess evolves and, how they use AI given, their renowned reputation for the customer experience. But, they have to be doing some of their own testing right now. And that'll be really fascinating to see what the outcome is.
Yeah, I think what's really
companies like that. I'm just saying they've often are referenced. Yeah.
Yeah, that are built on customer service.
Yeah.
What's interesting about it, as I think, it's like you already had IVRs back in the day, were like the first version of this, right? Then from an IVR, we got to like little chat bots on the website that like said, hey, I found this in my FAQs. Would you like to read this instead? This is just a more effective version of the FAQ bot. So what's the problem? I think that's a good thing. And then as far as customer satisfaction, I think long-term, this could be really interesting. So I think I can't remember if we did this on an episode or not, but I know you and I have talked about how you can imitate anybody's voice with AI now. So you could have like George Clooney be your IVR agent that you could ask any question to and blah, blah, blah. So you're like licensing George Clooney's voice to hopefully give you the nice rub on it and blah, blah, blah. So I just think it's really exciting what customer service could do. And in a way, it could be even better than a human because the AI can know so much about the customer that normally takes a support rep quite a bit of time to dig through the CRM or whatever to figure out about you.
Totally. We've heard from, and we know the players, but I'm not going to call them out specifically, but just how far the AI leasing agents can get. And I want to say it's around a half, I think maybe as high as 66% of the questions that you would have needed a human to answer, they can now support. Isn't that right? Ballpark 50 to 65%, something
Sounds
like
good.
that. Well, I bring it up because now I'm wondering with generative AI, if we're talking 85%, 90%, because if it's just getting us another 5 or 10, that's not really material. But you're really focused on the actual experience, less per se on the financial side. I mean, I know you gave the example, but just like that, if you had Clooney and they were that much more effective, that it's actually going to create a better experience, not be as consumed about the bottom line.
Yeah, I think it's both, right? It's more of like back in the day, you and I talked about like how upset we would get about like phone trees or like companies that send you overseas, and it doesn't seem like there's high training, I guess, about the people that are responding to you, where you're almost like teaching them about like, here's the question I'm asking. No, here's how this thing works and why I'm asking that question. So what I'm explaining is that I think the experience can become better and more for a customer, and we're excited about it versus now I don't want to call Bank of America because of the phone tree. It annoys me, right? But not only that, but then you could have examples like this where they're replacing 700 people with a better experience, meaning time to resolution 2 minutes. It's fascinating too. I'll give one other live example, but one thing that, again, we didn't get to with Dom, but was on my mind is in this space, while CRMs are such a big focus, I have not experienced a CRM that gives the client a fantastic customer experience when they go through it. So, meaning it from when I listen to phone calls or shadow leasing agents, it just feels like you're another number that we're trying to push through versus it remembering a lot about you until you get one-to-one and you have a dedicated leasing agent that you took a tour with and they know you by name and they whatever, right? But we are changing where we're boarding the dogs this week when we're on vacation, and this is what was fascinating. I was like on the phone, and I simply wanted to figure out, hey, what's it going to take? What do you need for me to board the dogs here? And so I thought it'd be a simple question. Then I wanted to go ahead and book it, and I had a fabulous experience with this dog boarding person, but it took 22 minutes for me to get through on the phone. But I was like, wow, he's really like customer focused. However, like what felt good about it was probably 12 minutes into it. He was like, yeah, you should definitely be signing up. Make sure you sign up after this call on the website and put in your request, blah, blah, blah. And first I was kind of annoyed because I'm like, could you just pencil me in? So it started off poorly. And then it gave me an error saying phone number already in use. And I was like, listen, man, I'm getting this error while you were answering my questions about phone number in use. And he's like, pulls me up. He's like, oh yeah, David, Nicole, I see. Yeah, you guys established an account with us in May of 2020. It looks like you signed up, but we were full at the time. So then you went ahead and canceled the reservation in June and didn't take it on that trip. And I was like, dude, I cannot believe you know notes. All this about me. Those are fabulous notes. And it just made me feel like I don't like they would know me. I was like, if you knew this before I even ever paid you $1, imagine what's going to happen once I start using you. So I'm just saying, I think AI could do that without having to take the 22 minutes. It could have already like realized when I called, like, hey, David, you used to have an account with us, blah, blah, blah. So
great point. Or anecdote, I should say. The last thing, and quite literally in the podcast, but that I'll mention on the intro, is just he does address the question around marketing and revenue management, like where the gap is and the value he sees in it, which I appreciate, which we, again, if we do a round 2, might want to pick up there. But that's something that's come up many times. And obviously we have a lot of marketing listeners or marketers listening to the podcast. So do stay tuned all the way through the episode. And, he'll touch on that subject and maybe tee us up for another fun podcast with Dom.
Last thing I can't not mention, but Reid and I, our funny bone got tickled in the middle of this recording with Dom. And we sent a message.
That's an understatement.
My abs are sore and my cheeks are sore from laughing. But we sent a note to our producer, Darren, like, I don't know if you want to cut the laughing out. It's probably just not going to make a lot of sense to the listener. So anyways, if Darren so chooses, he may leave the laugh track at the end of the David and Reid laugh track at the end of the episode to finish this out.
Yeah. Well, I hope he does, just for our sake. But you might have to go deep fake to fully eliminate the laughter from this podcast.
I've now been asked by 3 people when we left the room, like, what were you guys laughing about? And I was like, it's not even funny to try to tell you this whole thing. They were like, well, we were laughing because you were laughing. And I was like, great. It's now my policy. I'm just going to start laughing randomly in meetings and, to spread it.
Good luck drumming up the today's outburst. Yeah.
All right. Well, we hope you guys enjoy our conversation with Dom. Dom, why don't you go ahead and introduce yourself to our audience?
Sure. I'm Dom Beveridge. I'm principal with a company called 20for20’s. I work principally with technology companies who are trying to expand their reach in the multifamily industry.
Now, Dom, we don't know each other super well. We just met a few minutes ago, but last week we had someone on with an accent, and Reid named like 4,000 miles off of where they originated from. So, Reid, do you want to place the accent?
See if I can humiliate myself again. I think it was just a matter of whether it was New Zealand or whether it was England. And I feel kind of embarrassed to say that I don't have a better ear for it. I'm going to go UK.
Very good. Yes.
Oh, he gets one. Hold on. We'll go ahead and throw in a cheer for you.
Yeah. Thank you.
You're welcome.
I'm back to net neutral.
Just wait till next week. Yeah. All right. Well, thanks, Dom. So you were telling us offline that you had gotten you had worked in some hospitality, done some hospitality work before, and then I think it was 2012 when you said you moved into multifamily. So what got you pulled into multifamily in earnest, and for you to spend the last decade there?
Yeah, well, so I got into multifamily by way of revenue management. So I've spent most of my career in consulting, and when I've worked in technology companies, it's nearly always been for a company that does revenue management, right? So the technologies that set prices. And so I had worked in probably, I think multifamily was the sixth industry that I'd done revenue management in. I cut my teeth in hospitality many years ago. I did some rental car, some passenger rail, some air cargo, some inclusive tour, like a bunch of different industries. And then, around 2012, I joined the company, Rainmaker, the company was most famous for LRO. LRO has this interesting history where it was made by a company that I worked for many years ago, back in the late 90s. I got into the industry by way of revenue management, and have kind of gone from there.
I'm curious, since you had mentioned you've worked in other revenue management capacities for other industries, who do you think does it best?
I mean, airlines have a really big problem that they have to solve with revenue management. It's a really specific thing that revenue management does for them. You absolutely couldn't operate as an airline. I mean, since the 1980s, you can't be an airline and not do revenue management in some capacity. I mean, you can't be a particularly successful hotel company, rental car company, etc., if you don't do it either. But with airlines, it's such a difficult problem, like figuring out which flights are relatively busy, relatively quiet, how do my prices compare to other flights on the same route that are not all of the same quality. Like it's such a sort of big dimensional problem, airlines, that I would probably have to say that it's them. But as one very capable consultant that I worked with for years always used to say, everybody's always talking about airlines this, airlines that, but they tend to do stuff with systems that were written by people who have died.
Oh man. Well, so if you were to think of it 1 to 10, would you give airlines like a 9 or a 10 then? As far as a score?
It's difficult to say. I mean, in terms of having a fairly fail-safe solution to a really difficult problem, yeah, I'd put them up at a 9. Sorry, go on.
I was going to say, so then if my obvious question is, where's multifamily rank on the 1 to 10 scale? Now that we've set like this perfect, shining beacon on a hill, being airlines.
So I think there's a higher degree. I mean, there's a higher degree of like functional sophistication in the way that some revenue management systems do revenue management. Like if you sort of think about the factors that you're balancing to come up with the right set of prices for leases, you have to get a lot of things right. And just because leases are 12 months long, you have very little wriggle room for bad decisions in there. It enables people who are good at it to do it to a really high degree. The trouble is, it's just all over the map, like the extent to which people use technology well in the industry. I wrote an article in MFE late last year, just one of several things I've written in response to the lawsuits that are going on in revenue management at the moment. And the thing that I had noticed just through people's reaction to the content that I and others have been publishing about the how revenue management works and so on, what I became aware of is that people are really over-indexed on rent increases. Like it's probably the case that most people in multifamily think that revenue management is about trying to increase rent. And the thing is, that's so not what it's about. Like you get to increase rent when you've done a load of things that are not increasing rent. And those are the things that define what revenue management is. Like if you were, the thing they teach you in hospitality very early in your career is they say you can't take rates to the bank. Like, so the amount of money you're charging for a room is irrelevant, because if nobody buys at that price, then you just failed to make money. And it's exactly the same thing applies in multifamily, right? So people say, well, rent increases, because that has a very high salience, because it drives valuation, which drives real estate deals and so on. But the person that's usually obsessed with rent increases is usually the person that is not making any money out of revenue management, because they don't spot the damage that they do to themselves when they don't see the market turning the other way. And it happens every year, right? So the companies, for the last few years before I founded 20for20, I've been working with companies who would typically call us to say, look, we've been using XYZ revenue management system for years. We're no longer sure if it makes us any money at all. And revenue management systems that don't make you additional money are completely pointless. There's no, that's 100% what revenue management is for. And the problem is just nearly always that everybody got really high on their own supply with rent increases. They started to fail to spot, 60 days from now, you're going to have a problem if you don't change your pricing strategy. Nobody wants to hear that, because they think revenue management's all about rent increases, and they end up handing back every additional dollar that they made during the good periods to try and get people to come to live in their apartments during the bad ones. So yeah, people who, very, very, very long way around of answering your question, that people that do it really well with really good technology do it to a very, very high degree of proficiency. But unfortunately, it's completely all over the map in our industry.
Wow, that just gave me a bunch more to chew on that I'd love to get to. But you mentioned 20for20, so why don't you walk us through what 20for20 is, and then this new report that you have available?
Yeah, so 20for20 is a consulting firm that mostly works with technology companies to help them reach a larger audience. We do that through some combination of business development and a lot of content. Because we create a lot of content, we generally publish a lot of I publish a lot of thought leadership content out there. So I have a blog with quite a big following. And one of the things that we publish every year is this annual white paper. In fact, the name of the company came from this white paper that's now in its 6th annual edition. But basically, the idea of 20for20 at the start, it started off as this project where at the end of the year, you get 20 senior executives, so 10 COOs and 10 CIOs, representing the broadest representation of the different kinds of companies in the industry. And you put each of them through an identical conversation to find out what did they do in 2023 and what are they seeking to get done in 2024. And just over these few years that we've been doing it, it's just become this quite nice sort of temperature check on what's going on with operations and technology in the industry. So there's generally a lot of interest in that around this time of the year.
That's terrific. And so this report is available for people to download, right? Which we'll include a link in our show notes for people to get. Maybe just before I pass it over to Reid, what is... I don't know if you want to give us a fun fact from what you discovered this year, or if you want to give the most surprising one. So I'll let you choose your own adventure on that question.
Surprising to me was I had not realized how much bigger of a deal fraud was and currently is than in previous years. Like, it's always been this background thing. If you have properties, particularly in markets like Atlanta, particularly if you have high-end stuff in Atlanta, you deal with a lot of fraud. So it's sort of seen as almost seen as this cost of doing business if you're in that market. It's now mostly a nationwide problem. There aren't that many markets that are not seriously affected by this now. So that really surprised me. Like, you've got people who've been heads of technology for years in this industry who are saying this is literally the number one thing that I'm focusing on in 2024. It's that serious of a problem. It's the result of a few different things, right? First of all, you've got it feels like a kind of pandemic hangover. You had eviction moratoria so you created this. It's like you created this market for influencers and tutorials and so on how to not get evicted. Well, that's been fairly easily repurposed into educating people on how to make fraudulent applications. So there's lots and lots and lots of information telling people exactly which properties to target and how to target them. There's There's technology on the bad guys side that makes it very easy for you to get very high quality fake documents, whatever documents you want. And yeah, it's kind of getting, and this coincides with eviction taking a really, really long time in some jurisdictions, right? There are some jurisdictions where you hear people are just paying people to move out rather than wait for the court to do its thing, because you've gone from a 30, 60-day problem to like a 9-month problem, which is a really big hit on revenue. So yeah, that's a really big deal. It's the most evaluated technology that we came across in 2023, and yeah, it just feels like there's now an arms race between the good guys and the bad guys.
It's hard for, as David said, and for me to resist getting into the revenue management deeper and asking more. So I don't think I can let one question go, but I'll just put it out there. We can table it, but I'm hoping we'll have time. Why marketing expenditure or advertising hasn't been brought into revenue management, at least to our knowledge, like the classic, you mentioned LRO, but some of the other platforms out there, it doesn't appear that has much weight, if any consideration. So you can bite on that immediately, or we can come back to it because I have a lot of questions around the white paper.
Well, let's do white paper now. I just made a note of that. I've got an answer to, or I think I've got an answer to that one that we can come back to.
Cool. So my question, David said what has stood out. You mentioned fraud is something that is bubbling up right now. I'm curious, at least with this last white paper, or maybe even the last couple of years, has there been topics you've been surprised that haven't bubbled up or surfaced that you were expecting would be part of the outcomes?
I mean, whole topics that haven't. I mean, there's things about. There's definite surprise. I thought this was going to be a much bigger thing than it was. Kind of ahas. I mean, I'd have to think about whole topics that have been missing. But I mean, a good example. Like, so each year over the last few years, we've been tracking centralization and getting deeper and deeper into what people are doing. And maybe the biggest surprise sort of came last year when, just given where all the hype is in the industry, I fully expected to, we began to sort of ask people specific questions about what progress they've made. And so I just anticipated that most of that progress would be made in the arena of leasing and marketing. And because that's where all of the talk is in the industry, all of the hype is, and so on. And when you ask people, so a year ago, when we asked people what their priorities were, and then you separately asked them, tell me what you did over the last year, you saw this huge disconnect where leasing was the priority, but very few people were actually doing anything, substantial in terms. I mean, people were rolling out technology, but people were not taking leasing agents out of properties the way that you would think they were if you listened to what they were saying at the industry conferences, right? I mean, if you'd been to your AIM or NAA or anything around the middle of 2022, you would think everybody was moving leasing agents out of the buildings. And then by the end of that year, when you ask people, I think like 2 companies out of 20 had made any changes at all to the way that they to the way that they do leasing. Same is true this year as well. And the big surprise was that, the surprise at the time that no longer feels surprising at all is that the area that people are centralizing the most successfully and the most aggressively is admin, like the stuff that we normally associate with the assistant property manager role. I actually said this year, it's so clear that that's where most of the focus is, and that's where most of the progress is. I actually think in a relatively small number of years, it's going to seem odd to be a property management company that does accounting, collections, deposits, like that kind of thing at property at all anymore. It's work that doesn't need to go to be done at property, and I think I don't see how it doesn't become a competitive disadvantage if you don't move it offsite.
So what's your theory then on why 2 out of 20, like why the trend isn't moving quicker, given that it has had so much hype and it seems imminent, so clear that this is the better way to operate a portfolio? Any theories on what's kept it from moving faster?
Yeah, well, if you think about admin, leasing, and maintenance, right, the three main buckets of how you staff of activity that you staff a property for. Admin, there's absolutely no constraint, and nothing bad happens if you take that off site, as long as you put it into the domain of a capable specialist. There's absolutely no reason why that work has to go on at property level. So there's really no downside to moving it. The only reason you don't make the changes to the staffing model are reasons that are to do with, for example, going from 3 to 2 bodies on site. It's nothing to do with the work. It's simply to do with like coverage. So, what you tend to find is companies are figuring out how to centralize the function, and then by attrition, where they think they can run it with 2 people rather than 3, you just find that the staffing model just starts to change that way. Leasing, I don't think is the same. So if you think about what everyone sort of refers to as the UDR model, right? The model that UDR talks about in its quarterly releases. Where everything's self-serve, everything's centralized, and so on. That's one sort of extreme in the industry. But even with UDR, they still have some leasing people. Like they do lease ups the old-fashioned way. They don't rely on a technology-only solution to do that. So there are some constraints on how centralized you can be, and I think everybody needs some capacity to meet with people in person and have conversations with someone where you're trying to close a lease with them. I don't the idea that you could get rid of that altogether. I don't think that's quite possible. And there are also lots of properties who don't actually think it's that desirable. Like, so one of the sort of telltale things, I ask people to put each function on a scale from we have decided not to do it through to we've done it, and just tell me where you are with each of these things. With admin, nobody has decided not to do it. With leasing, there were 3 out of 20 companies that said we've just decided it's not for us. And again, they have good reasons for that. It's usually because, well, look, our properties just aren't that close together, and we need some ability to meet with people. And because you can't share resources between properties, that means there needs to be someone at the property where at least part of their job is leasing. So that places this constraint. So I suspect what will end up happening is you'll have the sort of UDR-ish kind of model at one end, you'll have status quo at the other, and people will fall somewhere along that continuum with a greater and greater share of the support being done by technology. So I think it's just by its nature, there are bits that have to, that don't entirely lend themselves. There is downside to taking that role entirely offsite. Maintenance is an even clearer example, although there's lots of things you can do to make maintenance more efficient. The money isn't really in trying to cut your FTE cost. Like the reality is, you still need people to show up and unblock the toilet, right, or fix the fridge or the HVAC or whatever it is. So the extent to which you can make the service like virtual is quite limited with maintenance. So I suspect it's admin is like zero downside, leasing is some downside, maintenance is way too much downside, and I expect that will predict the extent to which they get truly centralized.
Yeah, that makes a lot of sense. I don't know if you would agree with this add-on as a theory, but it occurred to me that compared to a lot of the technology that the industry is encountering, they have the opportunity to test maybe 1 or 2 properties and then prove it out. It doesn't seem like you really can do that with centralization. Either you're all in or you're not. But I don't know if you've seen, I guess, portfolios be able to effectively, test centralization. And just if you're only doing a few properties, how is that really a true test of centralization? So any thoughts there?
Yeah, it's exactly the right question to ask. Actually, I was going through this with one of the participants because he was talking about how they're working on centralizing admin at the moment, and he was saying that the challenge for us is that our portfolio is entirely made up of JVs and fee management partnerships, right? So we have a mixture of stuff that we own through partnership and stuff that is third party managed. And he was saying like the way I would like to do it is you establish the central kind of service provider. So you establish like shared services. So another participant in this who's an owner operator did it where they established this group that provide these services. They figured out how to they added scope to what they were doing. They found it sort of self-funded because with admin, you save money just by charging for stuff that you keep forgetting to charge for normally, and just eliminating like admin mistakes, each of which tends to have a dollar value associated with it. So you can mostly self-fund the establishment of a centralized team, and then once the team is doing these processes, you realize where it's okay to free up stuff. This other guy that was saying like, I would love to do that, but all of my stuff is JV or fee managed, which means we've got all these partners and nobody wants to bear the cost of setting the thing up in the first place. So their challenge is all about, well, how do you get that? How do you start making progress on this? Do you find a cluster of properties where you could run some kind of a pilot? And once you've proved out that you can make these things work in a little cluster of properties, then this becomes something that we get to sell to the rest of the people, the stakeholders that we have to get to agree to do it. That's, as you can imagine, that's quite challenging though. The other thing that's interesting is that I think admin would actually move really quickly, but for circumstances like the one I just described, and also the fact that you've got all these fee management contracts out there which have FTE numbers in them. If you're a fee manager and you charge back the cost of an FTE to the owner, how many calories do you want to burn changing the staffing model to save money, given that everyone's happy with the pro forma like as is? So what you see is that there are several, and this is quite a new thing, there are several fee managers who have started to offer a menu of centralized services. So your option is, well, you can staff it the old-fashioned way, or we can put 2 FTEs in the property and you can buy these services from us on a per unit per month basis, rather than you either have the FTE or you don't. I suspect those are going to look increasingly attractive. It's too early to say how well they perform, but I think again that's going to look so much more compelling in a new deal that I expect they will kind of take root.
Yeah, well, I haven't gotten to the white paper, and I'm ready to ask 3 more questions. So I'm going to squeeze one more in, pass it over to David if he wants to probe a little bit further. But you mentioned the self-funding, which totally makes sense to me, and we have our own versions of that where we try to prove some things out, and hopefully they pay for them along the way. As a consultant, somebody engages with you and asks you about centralization. Is it pretty unique in how you would propose that transition within each portfolio, or is it more formulaic? And my example of this, you mentioned admin versus maintenance. And obviously, payroll would appear to be one of the spots you'd get the most juice, for the squeeze. Mm-hmm. But is there a specific cadence that really needs to be followed, or could one operator say, I really want to see these kinds of results and they're outsized? And it's like, well, in order for you to do that, you actually need to start here, or I'm going to give you a different suggestion than for somebody that is more comfortable with kind of a protracted return and wants to just do it right. So yeah, just curious how much variation, and I don't know if this is one of the questions you're currently getting asked right now when you do these engagements, but it seems like it would be, given how much attention is on centralization. So yeah, how formulaic versus how individualized is it?
Yeah, by the way, you're sort of touching on the reason why I think this works, this format, why it's sort of popular. So if you imagine something like centralization, it's so contextual to the company and the portfolio. So if you've got, for example, a portfolio where you've got a lot of sub 100 unit buildings in your portfolio, that the imperative to centralize is so much greater than it is for somebody that has just a load of like 300 unit properties, because it's just you can't staff like to the 1 to 100 ratio really anyway. If we talked about a few examples, right? If you're a predominantly a fee manager, or if you're a syndicator where you've got all these different partners that you have to get on board, that means your approach is going to be different. If you're sort of workforce housing versus high-end, downtown properties. If you're in New York, like you're going to view something like self-serve leasing as a potential risk in a way that you wouldn't if you were in a suburban market, for example. So it's so contextual to what the what kind of company you are and what kind of property you are. It's one of the main reasons why the 20 for 20 format works, is because you can't figure out what people are doing and why they're doing it without having a conversation with them about it. Like I couldn't write a survey and put it in front of people like a questionnaire and get useful insight out of it. Any question you could ask to 20 different companies, they would each have such a different set of priors when they answered the question that you would miss the insight completely. So it's kind of a laborious way to get information, but like by the time you've spoken to 20 people and figured out what they said, you understand the breadth of options that are open to people and why people are doing what they do.
Well, this may take us, it will take us eventually back into your survey, but I was speaking to an owner a number of months back. They had owned dozens of assets and had used a half dozen management companies for those assets over the years. And this owner had said, David, and I'm not going to name him, so for now I'll just call him Voldemort and make it easy. So Voldemort was like, over the last 5 years, my cost of like operations from a software perspective has increased by triple digits. Yet the efficiency I'm seeing from these proclaimed software, like we're going to implement software X because I'm going to get X more efficiency or X more revenue from it. He's like, he hasn't seen that back on the other side. So he used primarily third party managers all the way through. And he was like, so why is it I'm paying more for software than ever? And I'm not seeing any of these, proclaimed efficiencies, whether it's AI, machine learning, or whiz bang product Z. So I'm just wondering, Dom, if you would agree with that across the industry is happening, and what should owners be doing differently, I guess, to help, recognize, like, if they're making these investments, shouldn't they get some of the benefit of it?
It's the perennial thing with multifamily technology, isn't it? Like, is the technology helping? It should conceptually be quite a simple industry, right? We market, we move people in, we move people out, we do maintenance and collect payments. It shouldn't be that complicated of a problem, but we keep finding little pockets of value to exploit through technology, and that means we build up technology over time. But whether or not the investments that we've made are really paying off, it's quite hard to track. Like, one of my big hobby horses is always technology companies focus too much on ROI as a number. I was explaining it to somebody who's relatively new to the industry the other day. Like, it's a really big deal that we're a real estate industry. It means that the assets that we make money out of are fixed, right? So you don't generate all of the demand for your property. You kind of manage it, and you can't sell more units than you currently have. And so every piece of software, every piece of technology has this kind of marginal effect on, well, does this make me a bit better at dealing with this particular problem that I think makes me better able to deal with the opportunity that I have? That's a much better framing, rather than, if you roll this system out, you get X additional dollars each year, which vendors really underestimate how much buyers don't like that. But anyway, that's a big hobby horse of mine. But this year in particular, I was really interested to get so I think 2 years ago, I asked people to tell me, how do you decide how many dollars to spend on each piece of technology? And across, we went through 4 different categories of technology. So 20 people, that's 80 different instances that we asked them to tell us about ROI. And in not a single one was there any measurement of how much ROI they were going to generate. It's almost certain every salesperson across those 80 sets of decisions showed up with a spreadsheet with the numbers in it, and if you apply a 6 cap to it, look at how much additional value. No,
Yeah.
not a single technology decision on the buyer side had been informed by any kind of analysis like that. So it's always been like, ROI. I think the way I sort of summarized it was salespeople think of ROI as a number. Really, it's truer to say that buyers in this industry, for buyers, ROI is a rationale. That's different. Like, you have to be good at getting people to understand what it is you're going to change about their business. I feel like I've just touched on something that you guys talk about a lot.
We do, yeah. It reminds us of multi-touch attribution on the digital side, where there's just all this conjecture, speculation about how much, one platform or various thing makes an impact. And we just talk in circles, and it's become kind of the boogeyman, I feel like, in the industry. So it does tickle us a little bit when we hear a different version of this. But I also empathize, because I know a lot of technology companies out there do present, oh, you're going to get this much back. And then it creates that, kind of cycle. So sorry. Yeah.
I've been doing a lot of work with Ingrain. And I was working with them on a paper about websites and unit level search on websites. And one of the articles that I wrote while I was doing that was just called "Our Leads for Losers," right? Because people are so obsessed with this piece of information. It's obvious why, but it's such a small subset. So I'm very, very interested in how people buy stuff.
How do you normalize? This very much connects to this question. So when David brought this up, I was going to ask you anyways about this. And I appreciate you saying, most buyers don't want to hear about that ROI. I think vendors and technology companies continue to make the assumption that they do. But however that plays out, with all the different companies, and especially technology, trying to lean into the centralization trend, how do you talk to them about normalizing the picture so that they can really get a grasp of what's working, what's not? Because I think that's one of the hardest things. And I assume in your white paper, you have to, on some level, you mentioned all the context, make that picture more understandable so that people feel like they can really, value and believe in the results.
If you think about the technology part, particularly, I actually asked people this year to tell me about how they evaluate technology. So, a year ago, looking forward, people had all these plans to do centralization and so on. But at the same time, because they knew properties weren't going to be trading at the same rate they have been over the last few years, they were looking for efficiency. So they were saying, 2023 is going to be the year when we try and eliminate overlap and get rid of vendors we don't need and save money and blah, 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 blah. So, and at the same time, in 2023, a few different companies came to market with products that are doing sort of vendor management or sourcing or that kind of thing. So I was just curious to know if anything had really changed about the way that they evaluate, buy technology, decide whether or not they're going to keep it, and so on. And for the most part, nothing changed at all. And the other thing was, irrespective of what people said a year ago, nobody's trying to save money on technology, or nobody's trying to review their technology stack with a view of making it cost less. It's much more like people were trying, a much more common problem that people are trying to solve is I'm trying to get to one vendor per category in my technology stack. We're a real estate business, which means not all of the technology I have is technology that I chose. So sort of rationalizing that way. And also this year in particular, because revenue is a really, really big preoccupation with people, because you've got so many markets that are really, really oversupplied. People are worried about where they're going to find revenue growth justifiably. If you look at markets like Austin, for example, where basically this year they're going to deliver 25% of the entire capacity of Austin in new apartments. Like, you're going to have real problems driving rent growth. I mean, even in a market with really strong economic fundamentals, you're not going to absorb that many apartments in a year, right? So people are worried about revenue, which means people are, to the extent they're changing anything, they're not trying to save money. They're trying to figure out what things can I do that will deliver some payback this calendar year. So, again, nobody was particularly interested in saving money. Nobody was interested in like these long-term, more strategic projects that pay back over multiple years. Revenue management, for the first time since I've been doing this, like, people seem to be very interested in moving systems now, looking for sources of innovation that will help them capture revenue opportunities that they haven't been able to date. Things like managed Wi-Fi, where, if a company had done some of that, they were usually looking to do more because it's a non-trivial ancillary revenue stream. So, people are sort of thinking about it like that. But generally, the most interesting thing when people give you examples of how they, what's the situation when they buy a new piece of technology? If you look at it from a vendor's perspective, everything's a beauty contest, right? I'm gonna present my product, and they're going to compare it to the other products, and the best product or the best price. That occasionally happens, but most of the time that's just not what's going on when people buy technology. Somebody was using the example of renewals, where, okay, well, I know that a top priority for our company is to perform better in renewals this year, again, because there's such intense competition for every lease now. Well, there are many different levers you could pull to improve renewals, right? I could make the process of doing renewals better. I could price better. I could get better at maintenance because it has a big impact on customer sat, which has a marginal impact on, non-trivial to marginal impact on renewals. So I've got all these different levers that I can pull. I can't do everything. What am I going to focus on? And occasionally that overlaps with some technology that they've also been looking at. And that's much more descriptive of how people acquire new technology, rather than the beauty contest that we tend to think of.
Yeah, that makes sense. Well, you mentioned the overlap. I'm going to stretch that just a little bit. But do you find, or have you, with some of the clients you've worked with or in this paper, multipliers between two technologies? So they're often sold linear, right? You don't come in talking about revenue management and then say, and this also, if you were to improve your payment system, I think most technology companies just don't approach the, their prospects that way. But as a consultant, you may have more visibility into that, where it's like these two together, you're going to see, a better result than if you were to just onboard this one technology in isolation.
So the thing is, we've roughly got two flavors of technology vendors, right? You've got platform vendors and best of breed vendors. And best of breed vendors tend to be focused on selling their own thing. So they're relatively seldom trying to multiply. Maybe, a smart tech provider might also provide managed Wi-Fi, but that's more of like an add-on than a sort of multiplier. And then the model, if you're a platform vendor, is you're just trying to make everybody buy everything from you. And it's interesting. They have very different ways of approaching that. But most of the technology in multifamily is made by either Yardi, RealPage, or AppFolio. Like, between those three companies, that's most of all the technology that's out there. So you've got a few other players and a best of breed, which we tend to think is a bigger segment of the industry than it actually is, right? It's they're the most innovative companies. They bring some of the coolest technology to the market, but still most people buy almost all of their technology from one of those three companies. So I don't think our model incentivizes people to identify multipliers in that way, unfortunately.
Do you think that there's a day where we'll see a third species, I guess, meaning a hybrid of best in breed and platform? I feel like, we just, I forget who we had on last week or the week before. Good night. Anyways, just
I was
talking.
trying to see where you're going. With
Well,
your
just
idea.
talking about the hope that it was Remen with Propex. Propexo. Thank you.
Reid's still struggling, as he says in the interview.
I'm used to the
Propify.
I was used to Propify, yeah. But just with companies like Propexo, and I'll give a shout out also to our friend Liz over there at Revolution RE, but that there's more piping and infrastructure being set up for the best in breed, to connect to these platform companies, but also potentially a new genre of company that maybe has 2 or 3 components of their technology that you'd classify or agree as best in breed, but still have the capacity to bring on, kind of a more comprehensive solution. So I'm just curious if you think that's in front of us 5-10 years from now.
There are definitely opportunities where I think it can be. I mean, it's interesting. So Propexo is a really interesting company. For me, they're primarily a company that lowers the barrier to entry for new software providers into the industry. So again, I don't see them being a sort of multiplier, but I do see that. So the problem I could see if I'm a relatively young startup, me being able to write integrations into these platforms is really consequential for how big my market is. Well, if you've got a company like Propexo that says just buy this off the shelf from me and buy it in a revenue formula that doesn't place all the cost up front, that makes it a lot easier for companies to get to an MVP with a big potential addressable market. So I see technologies like that as being really, really cool in the scheme of how the overall technology environment works. I mean, the obvious thing if we're looking for something that's going to change the productivity, to just change the model substantially, it's mostly going to be around AI. So one of the things I've been talking about this year in the survey, I was mostly interested in how people think about AI. Historically, AI, by the way, has been around. The very first interview that I did for the very first issue of 20for20’, right back at Optech in 2018. The first interview that I did, they had completed a pilot on Dynasty, like the what was then the first digital leasing assistant in the industry. So if you think about it, this technology has been around for quite a while now in multifamily, and it's very sort of broadly used. And when you ask people about how they view AI, they're still looking at it very much in terms of something that you buy sort of one app at a time, mostly from vendors, in the same way that you would with any other technology. I buy a digital leasing assistant in the same way I might buy like a payments app or something along those lines. Well, the penny I feel that has to drop over the next year is that, if I'm doing digital leasing assistant and I'm doing a digital assistant that handles collections and potentially like renewals and potentially handles service requests and that kind of thing, I've now got multiple different things working across the same life cycle. Right. So the obvious opportunity is that, well, rather than just have all these individual bits of technology, you can vastly improve the whole thing by saying, if collections is a good use case for conversational AI, it's a way better use case for a conversational AI that knows every single service request you've ever lodged at the company, like what your entire history is like, what preferences you expressed when you were looking for an apartment, and so on. Just given that AI is a technology that doesn't naturally seem to want to stay in its lane at all, I kind of feel like it's going to start to obviate entire spheres of activity and just improve things like service really, really substantially. And maybe that ends up being the kind of multiplier that you're talking about.
I love that concept. Absolutely love it. Would you not expect that to come from one of the large property management or prop tech companies, meaning your Yardi, Entrata, RealPage? Would you see that kind of use or cross usage of AI coming from a third platform versus one of the kind of established incumbents?
Well, most of them would be likelier to buy a best of breed vendor that's figured it out.
Then build it, yeah.
Yeah, Yardi will build its own version. That's what they do. And Appfolio has quite a different makeup to its customer base. So they tend to solve problems in slightly different ways from say RealPage or Yardi or Entrada or any of the others. So yeah, I see it finding its way into the platforms, but I probably don't see them as the first mover that's going to figure it out. Well, I mean, the other thing that we didn't talk about is what roles do LLMs play in this. So there's a few companies that I spoke to, not many, but a few that are starting to look at, okay, what can we do with an API into OpenAI, for example? What problems can we get that chat to solve, given that we no longer have to build the chat ourselves? And they're people, the only people who are thinking about that are thinking about it in terms of like back office stuff. So again, if you think about the trend, everyone was talking about centralization of leasing, and when people actually tried to start doing it, the problem that they focus on is this relatively low value add, very high friction back office stuff that is now being taken off property in a pretty widespread way. Well, the problems that they'll start to focus OpenAI on, I think, or external LLMs on, is going to be back office stuff. So you can see a trend where first the work comes off property, and then the work increasingly gets done by robots. Again, that's something that I see could change things and make things significantly more efficient than they currently are, and just at a much faster pace than we normally do.
But then Voldemort still doesn't get the benefit. Right. Like that's what it's, to me, I think it's interesting. And we suffer from it here too. Like we put in a lot of investment into our own internal tooling. And yet, if we think we're going to get like a 5% increase in efficiency, we don't then recognize a 5% net income increase, for example. And there are lots of different reasons for that. But I think it's interesting, Dom, and it goes back to what I'm going to take it as Dom's hot take earlier, where you said a software vendor shouldn't be going to market preaching ROI. So would you circle back to that a little bit and say, what do you think would resonate with the buyers? So as you're interviewing these COOs and CIOs, if it's not ROI, what metric would you be, I guess, advocating, or how would you recommend these tech vendors like approach those folks and not talk ROI?
Yeah, well, so what you find is that, and when I was asking people that question, and you realize that there were never any numbers involved, or hardly ever any numbers involved in this, what became obvious was that they were describing the story that they tell themselves about what improves their business, right? So, and the way that they evaluated the technology was really on the basis of how it fits with the narrative that they have in their own head about what improves their business. So people will think something like, if I constantly try and maximize conversions, like in marketing, like if I constantly try and maximize conversions, I know that good things happen in my business. I don't necessarily know by how much. Like I'm not sure whether what kind of percentage increase I get. But if I understand how this technology works, and I believe it's going to make me better at converting the business that I currently have, I'm not preoccupied with leads, I'm preoccupied with conversions. If I really believe that that's going to make my business better at doing that, and it doesn't blow up my costs, I'll give it a spin. That's the way that they tend to think about it. The other thing with anything on the revenue side, it's a low risk bet. As long as something's not really expensive, it's quite a low risk bet to buy another piece of software if I think there's any chance it's going to increase my leasing performance. Do you know what I mean? It's so people are quite likely, if they're convinced that this makes me better at the thing that I think I want to be good at. It's actually quite a low bar to clear to get a new technology to to get someone at least to the point where they're going to pilot a new technology. The impossible gap to bridge is the one where you're talking about some benefit that the other person doesn't think is the main thing that drives their business, and there's no spreadsheet in the world that's going to get you over that hump. So that the better you can be at finding out the story that the prospect tells themselves, and the more you can make your pitch be about that, the likelier you are to get them to pilot your software. That's more labor intensive, more nuanced, needs more training, expertise, etc. But you're way likelier to be successful doing that than trying to get people to buy into the assumptions in the spreadsheet that you built.
Yeah, it's interesting because what you're describing there is just an effective sales process. And what I think is amusing in the space is that the leasing agent is effectively the salesperson, but is often not trained like a salesperson, right? So when you talk about like increasing, you talked about rent increases near the beginning of the conversation, and a lot of companies, invest in things that they think will increase rent or help them increase rent. When I'm also a person for simplicity. I'm like, hey, how about we just do effective sales training for leasing agents? I think that would be way more likely to get you a 10% effective rent increase than, adding all these other systems and software on top.
Yeah, people who've been doing revenue management for a really long time and feel like they've got a really good handle on it, inevitably arrive at the point where they realize the biggest constraint on my ability to capture this revenue opportunity is the sharp end of the sales organization, like the leasing agents.
Yeah, that's interesting.
Well, you're right, sales process, but I think it's a brilliant piece of advice. Meaning my translation of that was sell into the confirmation bias, because that is such a strong weapon. That said, I'm going to ask you for the prop tech that's entering the industry that doesn't, I guess, have that privilege, meaning that maybe that operator or CIO hasn't discovered or imagined the strategy that technology is or solve, I guess, problem that they're solving. If you follow me, Dom, so it's like, well, this person just hasn't heard of this, so I'm not selling against them, which you're right, almost impossible. But they haven't kind of connected these dots and built out this vision. So what is your advice for the truly, I guess, nascent or 0 to 1 product, technology companies trying to make a go at it in multifamily?
I'm trying to find another smarter sounding piece of advice to give you than the one that came immediately to my mind, which is be first. So there's AI is very instructive. Like the answers that people give you about how they're thinking about AI right now, I think it's very instructive of how people buy software. What I noticed during the conversation, or at least after the conversations when I'm reviewing these 20 sets of answers, is that, all right, people have put this firmly in the domain, particularly any AI that touches customer is firmly in the domain of we buy that from a third party that specializes in that technology. Nobody's interested in how do we figure out how to do our own thing with ChatGPT. That's not a problem that anyone seems to be working on. So they're buying this in much the same way they buy any other technology, but one thing that I noticed is nobody voiced any opinions on what constitutes a good solution to this problem. Like we bought this. Normally people have opinions on why they bought whatever software they bought. Nobody expressed any opinion on what constitutes a good, digital leasing assistant, or what constitutes a good, collections or lead nurturing, or whatever AI it was. Nobody had any strong opinions on any of that, which I think just mostly leads me to think that people are just not that curious about this, at least not yet. And so I bet that if you're the first person to bring this to a company, you're overwhelmingly favored in that sales cycle. I mean, there are some companies who are doing side-by-side evaluations and stuff, but those are typically the companies you'd expect it to be, like the well-resourced sort of big companies. But yeah, I think if you're the first person to bring this technology to someone, you've got a really big advantage. I've told a couple of companies in the domain of AI this as well. Is like, what that tells me is, given that this is clearly going to get way bigger in scope than it currently is. It's going to do way more things. It's going to improve stuff like in ways we haven't even thought of yet, but people are still not thinking about it that much. If you want to be famous for this and you want to be the sort of first mover, then be the person that educates the market on this. Be the person that tells people how they should think about this. Don't just say we have a widget that does X, Y, Z. That's how people currently sort of buy stuff. They they buy widgets that solve problems that they're already familiar with. But if you are the company that shows them this is where it's going, this is where the real opportunities are, this could be you 1 year from now. If you're the person that has a really strong value prop built around just having deep expertise in this industry and where it's all going, I think you'll find that first mover benefit like really accrues to companies like that.
Well, as we start to wrap this up, Dom, this has been really interesting conversation for sure. But one thing that popped into my head as you've done this for 6 years, and for those of us that haven't read your 6 years of reports consecutively, what has struck you as the biggest opportunity in multifamily that is not being, you don't feel is getting enough attention? So whether it's that there's not enough founders starting tech companies to solve XYZ or whatever. And I'll give you my answer, 2 years ago was what Perpexo is doing today. I was like, man, if I was starting over, like we definitely need an easy button here to handle these integrations to lower that barrier of entry, as you said. So anyways, but from your chair, what is something that we're not giving enough love to?
I mean, I think probably you'd have to say it's AI right now. I think once I can think of a couple of people that I spoke to during the course of doing this research that are sort of outliers. But what you notice is how as soon as they've had some success just piloting some little thing, they become so bullish about how much this is going to improve their business. Like they're talking about, well, if we could solve this underlying problem, then we can do this entire thing in a completely different way from how we currently do it. So again, I think I wrote last year that people are acquiring bits of technology. They're not really. If you think about this the same way that you think about other kinds of point solutions, you're probably missing where the real opportunities are. Again, the idea of doing collections AI so that people don't have to make that set of calls each month, that's a somewhat good idea. The real benefit in that is, as I was saying at the time, the real benefit of that is that you take that entire activity offsite, you completely centralize it, you have AI do 95% of the work, and now you've got a really, really effective function that one person can run, and that changes the leverage of your business. Well, that now, 1 year on, that sounds like a small, like a circumscribed perspective on it. You should be thinking about all of like what you do administratively in a similar kind of a way. So yeah, I think you would probably have to say that people sort of listen to all of the hype about OpenAI. Like the first half of last year was ridiculous. Like if you were attending conferences in the first half of 2023, you would probably have thought, oh well, there won't be any property management anymore by the end of the year, because this obviously none of that like really happened in the way that the gurus were saying that it would. But people should open their minds to the kinds of problems that they could be solving and thinking, where do I actually think I'm going to be 3 years from now, rather than just looking at it as what products do I like the look of that I want to try out.
It sounds like what I'm hearing from you, Dom, is that it's still going to be a lot of the admin work, at least first, where we almost like feel it, and then gain some traction, and then after the admin work, we'll find other opportunities, and we'll almost get our like wits about us about how to leverage AI. Is that fair enough?
Yeah, I think so, and I think, this will probably be through. In fact, I can already see it happening. It's through evolution with some of the more interesting vendors in the space, like figuring out how you make AI something that benefits the life cycle of a customer rather than one specific. Rather than looking at it from the inside out, our collection sucks, let's get an AI to do that. Instead, just reimagining, well, what should service be like in an environment where you can basically have AI benefiting every stage of being a customer, and the data that will produce you've got this technology that could transcend the staff turnover, which tends to affect the service experience that people have in properties. So yeah, on both the back office and the front office sides, I think the change could be really, really substantial.
All right. Well, before we wrap up, is there anything else that you want to make sure that you get out there that people are aware of?
I can't let Dom get off the podcast without
your revenue.
Yeah, I talking about the marketing and revenue management.
Let me give you an answer to that. So the question was about why haven't things like marketing expenditure, I guess
I'll qualify real quick, Dom, but it's near and dear to our heart, because when we first came to market with our technology, Fiona, it's effectively a digital marketing recommendation engine, tells you where to spend it, how much, and it was agnostic. So a lot of what you see, with your Real page, I guess I'm picking on them, but was more, you could say, a little self-serving. It's like, we'll tell you where to spend everything other than ILSs, et cetera. And so I'm not trying to squeeze in some plug for our tech. I'm just saying that was our big, idea. And lots of operators got very excited about it, to your point of like, you got to be the first to market and kind of show them the way. And so we were like, here's the solution you've been looking for, waiting for your marketing dollars. And we had demos lined up around the corner. Everybody was super excited about it. But within 6 months, I feel like, certainly within 12, operators started asking, well, does it plug into my revenue management? Mm-hmm. It has to plug in for this all to work, doesn't it? So that I know how much advertising to spend in conjunction with what my inventory looks like. So we haven't really gotten to ask, I think, an expert, at least of your caliber, to answer that question on why you believe that hasn't happened yet. And forgive me if there's some version of this, but everyone we've talked to has said it doesn't exist. Yeah,
it's funny. I was at Real Pages at Real World at that conference last summer, where they made the big announcements about DemandX, which is the fusion of G5 plus revenue management plus NOC, like into the sort of holistic like demand management platform. I was sitting watching these sessions, and it reminded me the last ever user conference that I ran for Rainmaker for LRO. The theme of the conference was the new power couple, like revenue management and marketing. Like Rainmaker had bought a company like a CRM provider, and those two solutions were getting stitched like closer and closer together. Then obviously events supervened, Real Page bought a Rainmaker, and that, I guess, became a bit less of a priority. But what is it? 6 years on, that story has kind of reemerged as a big tech story for Real Page. Like if I look elsewhere, I think although Yardi doesn't explicitly pull this stuff into what it does, they have a very simplistic revenue management model, but they make the data available to so that you have at least the opportunity to evaluate revenue management decisions in the context of whether you have a marketing or a pricing problem. Reba, the new product, probably takes it multiple steps further, because they're built on this BI platform that companies will use to model things like customer acquisition costs, and so you're bringing the bit that does the revenue management closer to the bit that helps you understand the marketing. The long and the short of it is it's exactly the right problem to solve, because if you can avoid dropping your price, particularly if you look at markets now where, you've got soft markets, you've got markets where leads are more valuable than they were before. Being able to convert leads is way more valuable than it usually is. The sort of waste that we can get away with normally on the marketing side in multifamily is way less this year than it has been probably since anyone can remember. I've always been a really big advocate for bringing those technologies closer and closer together. And if they haven't come together fully yet, it's to do with conflicting priorities at the companies that make the technology, I think.
Well, thank you for addressing that.
Cool. Well, Dom, we'll include a link where people can download the report. But if they want to learn more about you or what you do, what's the best way for them to reach out and get in touch?
Yeah, best way is come to the website 20for20.com. So 20for20.com. I'm pretty active on LinkedIn, Dom Beveridge. You can find me there. But yeah, I'm usually pretty easy to track down.
Sorry, Reid. I saw you rear up.
That was great. Thanks, Dom.
Well, thank you, Dom. We appreciate it.
Yeah, thanks, guys. Take care.